With the economy clearly slowing, Ben Bernanke assured Congress the Fed stood ready to act.
I wouldn't want to take anything off the table at this juncture.
The stresses from Europe were mounting, the Fed chairman said, and posed a significant risk.
The crisis in Europe has affected the U.S. economy by acting as a drag on our exports, weighing on business and consumer confidence, and pressuring U.S. financial markets and institutions.
Hope that the Fed might act to stimulate the economy sent the market up again today, its first three-day rally since late April.
Our markets continue to be very fragile and somewhat confused.
Trader Jonathan Corpina of Meridian Equity says Wall Street needs to see stability overseas.
I think investors continue to be very concerned about what's happening in Europe and what's happening in China.
But Bernanke may have few weapons left to help the economy here. The Fed has already dropped interest rates to near zero, and a new poll by Wells Fargo and Gallup found that 1/3 of investors say they've put off retirement because low interest rates are preventing them from earning enough in their retirement accounts.
All my savings, all my financial plans seem like they're at risk.
63-year-old Bobby Sackman, a New York social worker who advocates for senior citizens, had hoped to retire herself in a few years.
Are you thinking about working longer then?
I am thinking about working longer than 66.
Sackman says she's played by the rules, saving and investing.
It's not quite working out the way I planned it. And so there is a sense of frustration, but maybe even more important than frustration is some fear.
And even the Fed itself seems confused about the direction of the economy. The head of the San Francisco Fed confessed yesterday, our crystal balls are much cloudier than usual.